Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on ospreystrategic.org as well as stockcharts.com. So this bull market just keeps pushing higher, continues to catch people off guard. They keep wanting, I keep hearing people, Friday was a down day and, it's time to short the market or whatever. The market has so much pressure here to the high side. Until some of these industry groups start to break down, I really don't see it. And one of the groups that's just starting to blossom here is the financials. So we're going to cover that off today. I'll do some current market analysis and then get into the bank stocks that are pushing higher. I think you'll find it pretty interesting because I know everybody says to avoid them for all of these reasons, but the bottom line is they want to go higher. And if you like the work we do here, you're welcome to come on over to ospreystrategic.org, and there's a 1-month trial offer for just $7. And the idea behind that is just go in and take a look at all of the newsletters we produce, the videos we produce, the daily setups, the Osprey opportunities pages, which are themes for investing, groups like gold or electric vehicles or the energy crisis in general, energy around fossil fuels like all the oil and gas stocks that are ripping higher right now. So anyway, if you're interested in all of that, more than welcome to come on over and try it for just $7. I received a really nice compliment in the mail today saying from another fund manager, and he just said, I'm really finding a lot of value in your newsletter. So hopefully you'll appreciate that and give it a shot. So first of all, let's go to the S&P 500. And you can just see this is the 60-minute chart. And we're bottom left to top right. That's called an uptrend, and it just keeps going. So this is June 27th. And, we had a 1-week pause in here, and then it just kept ripping higher. So we're heading into options expiration. I know a lot of people thinking that's the date that the final top is in. But the real thing for me is as long as the market wants to keep pushing higher, it's pretty hard. And these little 1-week pullbacks, even if the S&P falls from 4550 to 4450, back down to the 20-day moving average, that's really not that big a correction in a big uptrend. So very hard to try and dismiss the market here when so many groups are starting to run. When we look at the weekly charts again, we're getting up to test the all-time high, and without question that will cause some resistance. Now the NASDAQ is already above the March 28th high of 2022, but the S&P is just coming up to that level. The NASDAQ has roughly 700 points to go to break out to a new high, maybe 900 points, and the S&P 500 has 250 or 270. So we're getting to the point where when we test that high, and I would not be shocked that gives us a reason to at least check our work. But right now the market is in full-fledged push-up mode. And I've been talking about metals and materials and industrials in my newsletters. And so if you just go look at XLI and even XLB, these charts are basically trending higher, and the industrials are on their way, and materials look like they're ready to break out any time now. So that chart looks pretty positive. And if you go down here on the weekly, materials never, it got hit a little bit, but this was $90, and we've been trading, our floor's been around $75, so it's been a 15% range. Not too bad for 2023. We got up to 85.11, and we're just kind of working our way, and now it looks like to me like we want to start to break to the upside. Obviously the industrials have already done that. When we get in and talk about gold and gold miners, those are bottom left to top right. And, at the end of June looked pretty ugly. The charts were bottoming out. But in our newsletters, we were talking about why we should be looking for gold to get long here. And it's worked out as a great trade so far. The stocks are up nicely, but you can just see gold here up another 1.5% and the gold miners up 2%. and these charts just continue to climb. Now, maybe we make some sort of a head and shoulders top here or whatever. That's not the way it looks, and especially with the US dollar breaking down. So we've got lots of good things going on. XOP and West Texas Crude, these won't line up because of the no daily info on the West Texas. But when you look at these charts, here's the West Texas Crude touching its 200-day moving average, pulling back for a day or two, and it looks like it's trying to resume its climb higher. XOP is about to move above its 200-day moving average. Again, that bottomed out way back in March and is making higher highs here, while crude is sitting right near its support level. So I have no reason not to like these charts. They still look very, very good to me. And again, you're starting to get a little bit of green starting to show up on crude oil, and if it gets above its 40-week moving average, again, that's just a nice place to get on the ride. So hopefully some of the newsletters and some of the articles I've written about talk specifically about oil. I know I had some friends write to me and say, Greg, this other advisor says, just energy is going to be the worst here. But we're actually starting to see the charts change shape, and we've seen crude break out of its downtrend here, meaningfully back up into the middle of the range, and looks like it wants to shoot higher. And when we look at XOP, this was in downtrends here, and now all of a sudden we're continuing in uptrends. So I really don't want to be that bearish. It looks to me like it is ready to work its way higher. So all of these charts are working. Now, what I mentioned at the front end was the financials are starting to work, and I think that's a really important place to be. I want to just cover this off for those that aren't subscribers of the newsletter. What I'm looking for here is the perf charts, and when you go to this perf charts page, so here's the sector ETFs, but down below it tells you about the rotational model for sectors as you go from bear market to bull market. And one of the things that we've had is real estate and financials have been doing real estate's been doing great lately. I think they were one of the top 3 or 4 sectors for the last 4 weeks in a row. And then financials are starting to turn up here, which would be good. And again, the way this chart works is this is the stock market bottom goes to the top and then rolls down, and the economy is actually behind it. But what happens is the stock market starts to look forward, and as the stock market looks forward, then what you see is this will start to price things going in, and so much like in 2022 when everything looked great, the stock market was falling, and now where everybody's worried about what's coming, the stock market has been rallying. So it's pretty much priced out the recession at this point. And maybe when we get to those prior highs, it'll start to be a little bit more frustrated, and maybe it's as the earnings come out here over the next 2 weeks, we'll start to see that. But again, we are starting to see better price action. So the way this chart works is essentially you kind of start on the left and you work your way to the right, and then so these areas here can still be doing well, while these areas on the left can be doing these ones on the right can be doing well, while the ones on the left are doing well as well. But it's these consumer staples, healthcare, and utilities that once you've kind of seen the stock market roll over, and energy pretty much marked the highs in. It was still doing very well in April when the stock market was getting weaker. And so here we have, essentially all of these growth areas starting to push higher and leaving consumer staples, healthcare, and utilities behind for now. And there will be a rotation at some point, but we're still seeing very strong pushes into industrial materials and energy right now. And if you read my article at the end of June on the stock charts, Chart Watchers page, and it's an article in the Canadian Technician. It's also under free stuff on the Osprey Strategic homepage. So go and check it out. But what I was talking about was I was calling it a Super Bowl second half, and that is where everything looks great at halftime. You don't really know what's coming, and what we're looking for now in the second half is the game to change, and all of a sudden it shifts from one group working great to another. Now, technology, discretionary communication services continue to do well, but we're starting to see all these other growth groups, and financials have really held things down for a while. But what we're starting to see is that financials now, right in here, over the last 200 days, is one of the best performing groups on the end of this chart, and performing a little bit better, maybe in line with energy, but you can clearly see that these other groups have done well. Now, if we just say who's done well over the last 200 days, almost everything is up except utilities, healthcare have been the weakest performers, and staples roughly around real estate. Real estate's made a hard comeback in the last, I want to say, 40 days or something. So it's pushed up quite nicely, and you can see these defensives have really been out of favor. So we're starting to see this rotation, and again, I think the energy rotation and the materials rotation is kicking up on the back of the industrials starting to fire. So we're going to talk about the financials now, and again, the idea behind getting involved with the financials is, they've put money aside for problems in credit and mortgages, and they might have to increase that or whatever. But what we're starting to see, this is a 1 month view, and here we have Charles Schwab up 20%, and a lot of it is this week, so we're just getting started here. But when you look at all of the bank action over the last, again, 1 month, you've got very few banks that are negative, and Goldman Sachs and Citigroup are down here at the bottom, but there's lots of good names percolating higher, and I think we all saw JP Morgan break out to new highs recently. So it's a place where I think it's worth looking, and I'm starting to see some really nice price action. So let's jump into some of these charts, and again, we need to put numbers on the front of these to get the best listed first. So we can either do it based on scooter ranking, or we can do it based on price, or we can do it based on the alphabet, whatever we want. I typically like to use the scooter ranking, and it does a pretty good job. Now, what I like is when a lot of these stocks start to have high scooter rankings above 75%. And when we look at one of my charts here, this is the scooter ranking, and what you see is when it's terrible, it's rated worse than most of its peers. So in this case, it's a large cap peer group. And then what the scooter ranking will do is it will start to show a change in behavior. So what happened at the beginning of the year as tech took off, the financials weren't performing as well as technology, and so as they started to drift lower, that was an issue. And now what we're starting to see is they've gone from being worse to starting being better than 30 or 40% of the industry groups out there, and it's that change in relationship that I particularly like. So back here we show it being very weak and then taking off. Here we show it being very weak and taking off, and we've got the same sort of experience showing up now. So all of these things look pretty good to me, and this is the kind of price action I want to talk about. Sorry, just had to clear my throat there. So now let's go back and again sort these charts based on scooter ranking. So the way we do that again is we go into edit list, and we just say we want to select all of these charts, and we want to remove the numbers from all of these charts, and then we'll put them in the order of the best charts first, or the charts in this case with higher scooter ranking. And so when you're in edit mode, you don't have the choice of which column to sort it on. So we're going to go back to summary mode, and again we're going to click on the scooter ranking, and if that's what you want, or we could click on relative strength, RSI. We could find something else that we wanted to do. Volume related, I particularly like the scooter ranking, but what we do to start this then is we just scroll to the bottom of the page and hit this number in sorted order button. And when we do that, it adds a number to the front of all of these columns. And now when we go look at these charts, we get to start seeing what they're doing. So let's say that, here's a bank, this one is out of Argentina. It's breaking out to new all-time highs. So that looks pretty bullish to me. That's the kind of price action we're looking for. So let's just click on View All. And again, I've already set all of these charts up so that they're a 3-year window, looking at the time frame basically goes back to just after the COVID shutdown in early March, and then rallying from there forward. Yes, it's already been 3 years. Isn't that crazy? So anyway, we're breaking out to new highs here. And here's another chart, Banco Santander. So this one is SA, which I think is South America, and then Santander is also in Spain, if I'm not mistaken. So anyway, this chart, you can see it got to $4.05. Here's $4.02, and now we're pushing up right around $4. PPO is just starting to turn back up around 0. That's a very bullish setup to me, and the chart looks like it's ready to go. Now, what you see here, these drip lines are the dividend payments that the company makes, and so again, we're kind of mid-year, and this one hasn't paid out in mid-year typically, but we should find some of these that do. And here is HSBC breaking out to new highs. Again, here we are with bank stocks breaking out to new highs, and nobody wants to talk about them. Here's Credit Agricole out of France, and this one pushing up quite nicely, again at 52-week highs, and it's sitting, let's call it 617, 664 was the prior high, so it wouldn't take much to break out to the top side. This thing's paying 57 cents dividend once a year, which is real rough at the time, about a 10% dividend, so that's pretty steep. Intesa Sanpaolo out of Italy, this chart again breaking out to new highs, and I don't know if you saw Italy's stock chart the other day, but it's breaking out to new 13-year highs, goes all the way back to 07 or 08. And it's breaking out really a crazy chart that has gone nowhere, and all of a sudden it's starting to push, and here we have this bank starting to break out. So this looks pretty bullish. Here's Moody's, it's at 52-week highs, and looks like it wants to continue a $360 stock. Mitsubishi Financial, and again, one of the things I like to look for, let's talk about the scooter ranking here. Just pause. Let's say you don't know anything about this company. Well, let's look at its history. So first of all, scooter ranking got really weak back here, and we're talking mid-2021, and it just hovered in the middle. And so my definition of the middle is between 25 and 75, and when it's stuck in there, it's essentially behaving the same as the S&P 500. Might be a little bit lower, a little bit faster, but in a large cap stock, it's pretty much moving with the index, and so you're not really seeing outperformance. And so what I like to see is when it's ugly and gets better, and in this case this one wasn't that ugly, but you've seen this one here, it's been pushing up into a scooter ranking. It was up around 90% at the beginning of the year, and it's pulled back a little bit, but it's still behaving better than 75% of the large cap stocks out there. That's pretty good at price action, and here we have it, it's at 785. That's hitting a new high here, and again the Japanese banks have been doing really, really well. So I like the scooter from that perspective. Let's try and find one with a little bit more wobble. This JP Morgan, as you might imagine, JP Morgan is the boat anchor in the banks, and what we see here is, it was kind of just performing under 75 and above 25 going all the way back for most of 2022, and then it started to rally. It had a little bit of a pullback in March when SVB Bank and all of those failed, and it looks like JP Morgan got the better of that deal because their earnings with the new components in it from buying some of those assets. And now here we are breaking out. So JP Morgan making a new 52-week high. Again, that's pretty hard to argue with. The scooter rankings moving up to 75, and now we'd like to see it kind of get really going. So Sumitomo Mitsui Financial, this one goes back a little bit farther, but you can see the stocks hitting new 5-year highs, breaking out, and the scooter ranking, again, a lot of these banks never get down below 75, but I don't really want them when they're just between 25 and 75. We can buy the S&P 500 and kind of get the same result. So I particularly like it when they go from worst to first, like in here. It was really low, and then it took off all the way up, and look at this run. It went from 330, 480, 530, 550, so almost a 40 or 60% gain in these bank stocks, or in this particular bank stock in 3 months. That's a pretty heady run. So I like to see that. Now here's Ameriprise Financial. Again, it looks like it wants to start breaking out to new all-time highs. What's wrong with that? The PPO is turning up right near zero. So what we don't want to see is when a stock has a PPO and it's rolling along and now it starts to go below zero. That's a good place. In this case, it just happens to be when it falls below the 40-week moving average, but the PPO goes below zero and you're spending time down here. Now, scooter ranking gets pretty ugly, all of a sudden starts to change and takes off. And again, July of last year rallied nicely here from 216 to 289 over a 6-week period. That's pretty sweet. So when these stocks are moving, and look at how orderly the process has been here. So this is starting to perk up. It pays $1.35 dividend on $350 stocks, so it's not exactly a huge percentage, roughly 1.5. But again, it gives us something to look forward to. Here's Equifax, and this one is breaking out to new 52-week highs this week. How many times am I going to say that on these bankers? Here's another Japanese bank, and it's ready to break out to new highs. Again, $3.30 stock, but here's $3.30, so it's pushing up. $3.31 right now, and just turning up. So all of these banks worldwide look like they're getting a lot better. That's kind of the message I want to portray today, that they're starting to move. Now, if you're interested in dividends, just make sure that there's a dividend drip here that matters to you, and we'll see some of these other companies start to show it. So here's Franklin, roughly a $30 stock, and it's paying a 4% yield, and it just paid it in mid-June, so there won't be another payment until September. But you can just see how they're evenly spaced across the chart here, and the number in here tells you what it was. So 28 cents, then 29 cents, now 30 cents, working its way higher. So I think these charts look pretty exciting, starting to improve. Société Générale out of France, and the EUFN chart, let me just go grab that because it made quite a move this week on breaking out. And what I want to show is this price action. Just look how this stock, or this ticker symbol for an ETF, was stuck here for 5 months. And what did it start to do last week? Literally break out to the upside. And again, everybody talking about troubles in the European financials, and I'm showing you stock after stock testing 52-week highs. So ignore the story. The charts are improving, and again, they started to improve more last week. Here's the CBOE, and that's pushing up, was a new 52-week high last week. Wells Fargo trying to get going here, paying a 2.6% dividend yield. Looks like it's going to pay a dividend very soon if it hasn't already, maybe 1st of August. BNP Paribas, again, 5-month highs. So it's the picture that all of these banks are improving at once. We're not just talking about JP Morgan. We're not talking about one bank in Australia or in Argentina. It's literally, as we roll around the globe, we're starting to see these charts break out, and I think that's a pretty important message to take. So here's Intercontinental Exchange, the ICE group. I think they own the New York Stock Exchange. This chart just broke out to new 52-week highs and is holding inside that range this week. HDFC Bank, again, trying to break through prior highs. Jefferies Financial, this one started to perk up last week and continues the pressure this week, up 3.37% in 2 days. And we're getting into the asset managers here. UBS starting to break out. So again, I like the charts. Australia, here's another one, and it's sitting at 5-month highs, and it needs to go up another 80 cents to make new 52-week highs. Probably not that big a deal. Raymond James Financial, this one's starting to work its way higher. BlackRock, this 760 has been a real hurdle for the stock. If that can start to break out, they look pretty good. Okay. So without going through every banking stock, I've got over 500 and some in my financial sector. But if you're interested in the work we do at Osprey Strategic, I'd really encourage you to come on over and try the $7 trial, or try it for 1 year and just see what you think of it. The idea that we're trying to help you is a macro perspective, trying to make sure you see what's going on around the world. And I've been covering off global charts, and I've been covering off the oil and gas starting to turn up, and I've been covering off materials and industrial starting to turn, now banks starting to turn, and most people are sitting there looking at one sector. And so I think you'll find that the broad perspective is helpful. And then the second component of that broad perspective, obviously, is daily setups that trying to find stocks with some nice entries. And again, I got a compliment this week on our quality of work there. So how about with that, I go back and just, missed it. Just talk about how to get there. Go to ospreystrategic.org. Check it all out. I think the most important thing that we have to watch for here is price action. And right now, all sectors are firing. And normally what would happen is you would start to see some sectors slow down. So with that, thank you for taking the time to join me. Best of luck through this earning period, and hopefully we see a lot more stocks jumping up 2, 3, 4, 5%. Thanks, everybody. Bye-bye.